What's going on, everybody? Michael Silva here. Let me tell you something. The Bulls, they be getting too bullish. But honestly, in 2023, the Bears have been a little bit too bearish. We're watching the Stock Market Brief show. My name is Michael Silva. If you haven't done so already, please subscribe to the channel. It's greatly appreciated. If you like technical analysis and intermarket analysis, and make sure to hit a thumbs up if you haven't done so already. That right there is a thumb. Now, in today's episode, we are going to talk about a lot of different stock market indicators that have been in overbought conditions. They're starting to roll over. Yesterday, we talked about the big short opportunity, and I'm going to get some clarification and follow up on that because I got a lot of not only comments, but a lot of people reaching out to me in regards to that. And, you know, it kind of put up some red flags. So I want to show you how I'm approaching it. And so you get a better idea of where I come from as I present that to you. Now, what we're looking at right here, we're going to start right into it, by the way. This is the NIAM Exposure Index. It's the National Association of Active Investment Managers. And basically right here, this NIAM, this is the one that I'm going to be paying attention to up here, right? This is real money down here, the RIDEX. I'm not going to get into that one. But the National Association of Active Investment Managers has got an 85.40 reading. And I'm just calling this out because as this updated, we haven't seen this reading since pretty much, since 2022 around this reading, and also the beginning of 2022, which we know was, a high reading, and then also in April right here. And then the last one that was a big spike was up over here, and that marked that top. This has been a very good contrarian indicator. I wouldn't put overweight onto it, but basically what this tells us as it stands right now, as I'm saying, the bulls are a little bit too bullish. We're getting an 85.4% reading, which means, right, the members who they survey are asked to provide, what their overall exposure is to the market. And they're basically saying we're 85% long, 85.40% long, right? So this is actually a pretty high reading relative to what we've seen over recent, in the last year or so. And as you can see, it has been a good contrarian indicator at those peaks. Is this time different? I don't know. Let's take a look at some commodities and also various assets starting here. Actually, we'll go to the dollar first. We'll look at the currency. It started off pretty bearish looking throughout the day, but then it started picking back up, putting pressure on the S&P 500, right? We had a nice big move gap up, but it closed on its face today. The 10-year yield also started the day down like bonds started the day up, right? But then we started closing at the top or around the high of day as this bullish divergence is starting to play itself out. Those two combined push the price of gold down. We discussed this possibility of a bear flag. I will say it looked very bullish, right? People were like, yoo-hoo, the bulls are back in town. But then we just got a ripper back down to the downside. To me, I would love for it to come down in here because I do think that this is a cycle trade where we can see gold, potentially hit higher levels and take out the prior high. So something that I'll be paying attention to. Silver, also this, it cracked down through this and it's very, it's just consolidating right now. So we'll continue to watch that one as well. Not really the greatest setup, maybe a little bit lower, maybe back to this 200-day around 21.50. We'll watch out for it. Copper, also this negative divergence, right? We've been talking about this. It's been building. It's starting to play out, right? The S&P 500 got hit. But I will say on the very shorter term, S&P 500 is putting in now lower lows. There's a low, lower low, and copper is actually putting in a higher low. So is this move down in the S&P 500, this pretty much one day down after 2023, right? Right, the bulls are too bullish, right? We haven't even seen actually consolidation or anything really take place. But is there more steam to this rally? We'll get into that a little bit more. The price of oil, as you can see here, is down 0.5% on the day. It's really just consolidating sideways right here, and it's just on the brink of breaking this potential neckline. So if we do break that, watch out, it could strike a lot lower. So, not much to say there. Volatility, we've been talking about it, how it's been contracting, right? Expansion, boom, leads to contraction. And we saw a little bit of a pop up today. Is this the start of something bigger like we've seen in prior moves? It's always a possibility, but that's what we're currently seeing take place. As far as the summation index, we talked about this one yesterday, hasn't crossed over, but it looks like it will be, right? It's starting to curl itself back over. It takes a lot for that to happen, but the parabolic SAR hasn't ticked up from that, so we'll watch that. We'll continue to watch that. RSI is starting to come off a little bit here, but it's still in that overbought condition there too as well on the BPCO-MPQ. Summation index, you also, right, it's starting to curl itself over more. It looks like it's about to tick over, hasn't done so yet. If we actually zoom into this NIMOT area, this is the Nyersey-McClellan oscillator we talked about when it cracked through zero. We talked about this rising wedge. You can see the weakness starting to show right here, but really, you know, it's just been going sideways overall. So are we going to get a continued move, crack down, you know, and start to see a series of lower highs, lower lows? So we'll continue to watch and see how that develops. I will say that we're still in that overbought condition there too as well. Another thing to watch out for is the price of Bitcoin. I took a little bit of a hit today. This is something that I shared on Twitter. If you don't know what this is the Saylor to Schiff tool, right? We mark, basically, we're looking at a relative strength line between Bitcoin and gold. I have a video that's separate, just, you know, YouTube Saylor to Schiff tool and look for me. I made a video on it. And we, you know, this started turning back around, and I posted on Twitter, you know, right when it was up in this area, wait for it to start turning around and cross down through the zero line. Right, the zero line, the rate of change, and we could see some weakness. Well, when it started turning back down, you can see we're starting to see a little bit of weakness in the price of Bitcoin, but I'd like to see it cross through that zero line. The reason why I'm showing you this now, as we're starting to see this weakness, is because when this crosses down through zero, or when it starts to make the turn, also some big short opportunities are like crypto-related equities. So for example, as this was starting to turn over, MicroStrategy, right, MSTR, was just consolidating sideways, and then this took a hit a little bit more down today, and MicroStrategy was down almost 10% on the day. So this can be, you know, if we cross back down through it, as I'm pointing out here, when the rate of change reached up to around this 20 range up here, right here, right here, and right here in recent, that was after a, you know, pretty big bear market rally, and then it was faded, right, as it crossed down through the zero line. Then it rallied up, crossed down through the zero line, started to fade even more, and now we're having that bear market rally. We're still above the zero line. Perhaps, you know, there could be some more weakness up ahead there in the price of Bitcoin. Let's take a look at Bookmap. Now, if you don't know what Bookmap is, I'll tell you really quickly. If you're familiar with level 2s, and if you're not, that's okay. But this is basically allowing you to see a little bit more than the candlestick chart, right? This allows you to see the auction, what's going behind the scenes. It'll take your blindfold off while you're trading and actually see how many offers are on the bid and how many people are on the ask. And, it, you know, the thing is, with this, it's a very hard to read, right? It's very quick. It moves very quickly. A lot of people have trained themselves to read the tape, and they can do that through here. I personally use Bookmap. Bookmap just paints it on the screen, and you can see history of high areas of liquidity via a heat map. Now, I shared this chart yesterday, and we showed yesterday's close, and we marked out some areas, right? Sometimes after the close, all of a sudden we get some interesting orders that pop up, I've been noticing. And you can see here, 4170 we talked about yesterday has like, we all of a sudden we got some big orders coming in after close, like a little sneak attack. And then we had 4095, a little spike right there, but we also had this 4100 area light up while price was coming down, and then we started to get orders down here. And if I now go to today's price action, take a look here. We started the day gapping up to that 4170 level, and that right there held. You can see it started to get a little bit red, right? So more orders were there, and it pushed price down out of the gate. And look at where we finished, 4095 to 4100, right up in this area where we were marking that around that 4100. So very interesting. And the reason why I'm telling you that is now because I'm like, okay, sneaky people over here. So I'm looking at today, right? The close of business was today. And I'm looking at these levels. I'm like, okay, so as soon as business closed, you know, this started to heat up a little bit over here. So let's look at 4140 to 4145, you know, this area up in here going into tomorrow. And then also going into tomorrow from the downside, this kind of heated up a little bit down here, which is 4060 to 4055 range. You can see these two, you know, spikes meaning more orders. So that might be a very interesting area to watch. And then I looked at obviously the weekly expected moves for ES, and you can see here, oh, what do you know? 4070 is the lower weekly expected move, which is right here. We started to get orders. Take a look, right? As price was coming down, all of a sudden orders started to come in and supply a bid below, you know, that where price was, and it started to bid back up, and we closed. So right in this range tomorrow might be an interesting one to watch. Let's hop into the S&P 500. Then we're going to get into the NASDAQ. And then we're going to just follow up on yesterday's short video, not the Big Short video title. So if we look at the S&P 500 on the daily time frame, I just want to reiterate one thing here. This box right? This box was actually measuring from here to here. It was the 50% to 61.8% retracement level is what we were looking at right there. Or was it right from here? I can't remember exactly where, but I remember drawing it out. It was the 50% retracement level within this little range over here to 61.8. And we marked that level because if we were to start to get a pullback, right, it might produce a lot of fear, but overall we are still putting in, higher lows, in the shorter time frame and higher highs in the shorter time frame. So that could be a pullback within an uptrend. Okay, ignore the purple line. I forgot to remove that, but this red line, that right there is the year-to-date anchored VWAP. So the bulls still remain in control for the year overall, okay? Now, if we go to the 15-minute time frame, we talked about this trend line. Watch out for it to break. And yesterday we talked about, hey, it has to get back up above here and these anchored VWAPs to be bullish, okay? And it did. It started up there, but we had to proceed with caution because as soon as it started closing down through there, guess what? We started seeing more sell action. As soon as it broke this trend, what do you know? We broke down. Where was the target? Potentially lower weekly expected move. We were not too far off from that. So on this, I want to share a couple of things. First, the lower weekly expected move is 404.68. So if we get further downside, we're going to look at like the RSI and the PMO here momentarily on the other chart to see, hey, it could actually be an opportunity to play a short-term bounce. It's a possibility going into tomorrow, right? We have some strong sell side and we typically get relief bounces, but if we start bouncing, where would it go? Well, if I anchored a VWAP to here, anchored a VWAP here, anchored a VWAP over here, these are the high peaks, right? Peak 1, peak 2, peak 3. This was the start of it today. And you can see also if I anchored to the Fed anchored VWAP, the JWAP, the Jerome weighted Powell, Jerome weighted average price after they had that conversation or the blah 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 blah. The last time he talked earlier this week, or was it last week? I can't even remember. Earlier last week, sorry, he came out and talked, and we saw this big rip. But now price is trading underneath it, and you could see all of these things are lining up as price is below it. So if price starts to rally back up here, it could potentially retest a broken trend, and then all of these over here. So to be more bullish, you want to see price really honestly reclaim these levels. If it doesn't, proceed with caution, because as it stands, right, on the shorter time frame, we have a high, a lower high, a lower high. We have a low, a lower low, and a lower low. All right, so we have a starting to form potentially a top. And now we have the 5-day moving average starting to curl itself over. We're below these key anchor VWAPs over here. So this now can potentially start acting as a level of resistance where we see more downside. If we get more downside under this lower weekly expected move, start to watch that year-to-date anchored VWAP. Really quickly, what I wanted to show you was the RSI. So if we get a quick hit to the downside to the lower weekly expected move and it comes down further, pay attention to the RSI where it's at. It might be very, very oversold and people might, get freaked out, but you can typically play, intraday trades back into the lower weekly expected move. It makes for a good risk to reward. And then the PMO, price momentum oscillator, can potentially curl back up, would be one to watch. But overall, you can just see it was just steady sell side activity. It was a big bearish engulfing candle on the day, right? We gapped up and we closed at the lows. It didn't go any higher really than where it opened. Pretty bearish overall, so we'll see here if there's any continuation from it. That's the important factor. NASDAQ 100, bearish day as well. Big gap up, got above the open of yesterday's body, and then closed underneath it. So big bearish engulfing. You can see the MACD starting to curl itself over. Same situation here with the Qs. You can see it's been steady selling all day to the downside. 297.29 is the lower weekly expected move. And just pay attention to where we're marking these anchored VWAPs up in here. I forgot to do the Fed one over here, but it's going to be right around the same area. So if price starts moving back up, pay attention up into this area around 306. It could act as a level of resistance. So we might get a nice big move. People get excited. They chase it. And then all of a sudden, right, the volume weighted average over here pushes price right back down. So to feel more confident, to get more bullish, you want to reclaim these anchored VWAPs. You want to reclaim the 5-day moving average. You want to reclaim this little peak over here, because as it stands, right, we're breaking down so far, right? High, lower high, lower high, lower high. We have a low, lower low, lower low, lower low, and a lower low. So in the short term, we could just be consolidating, right? We could be flagging, always a possibility. But as it stands, we want to reclaim those levels. If you actually take a look at the cues here on the 15-minute time frame, we reached back down to that lower channel. And this right here, this to me was a pretty easy setup intraday to potentially take a long. And as it came in there, I did do a little scalp there. And the reason why is because, one, it's been acting as a level of support since the 6th of January, right? So boom, support, boom, support, boom, support. Came back down in there today. But not only that, if I was looking intraday at the 2-minute time frame, how we had that gap up, and it just stayed within this channel all day, right? So a high, lower high, lower high, lower high. And as price was breaking down and coming to the lower channel right here, it was also coming down to the lower channel here, which made for a potential setup back up to the top, and then we started to get rejection. So if you're going to be looking at this tomorrow playing intraday, watch to see if we get a break to the upside, and that could potentially give us a little insight to potentially head a little bit higher, right? We get that break, maybe we do come strike 304 to 306. That's always a possibility. All right, so I went over a lot in detail over there. Let's reiterate the big short idea. Now, understand that I called it the big short, but with the amount of responses that I got from it, I want people to understand like how I go about this, so you get a better understanding. This doesn't mean you go all in and YOLO. Like, I was pretty clear there, but it seems like people really want to take big positions, and it's all up to you necessarily, but I'll tell you what I do, right? So first and foremost, NVIDIA started with a pretty strong move to the upside. Me personally, I was looking to short NVIDIA, I got SOXX. I'll go into that short momentarily, but you can see we started ripping up higher, but guess where we finished? We finished right by the weekly expected move, okay? So when you short things, and remember, NVIDIA is going to be reporting here soon. When you short things, you got to be very, very, very aggressive typically with your risk management, especially if it's large positions and even small positions, because shorts, if they take away from you or if they get away from you, they can keep going and going, and that's where, big damages can happen to a portfolio. I'll show you really quickly Tesla too intraday. Tesla gapped up and it opened at its weekly expected move just above it. It bounced right back into it, and then it just started pushing off from it. So I was looking to short this too intraday, and I did, and I got out of the position right around this level, 209, as it was coming back to where, right? It did a full, and this is a big move, up to 214, back round trip to the upper weekly expected move, 206. Okay, this is when I posted it. I think it closed right around here somewhere, I think. So this is what I mean by like intraday opportunities for good shorting, right? So, not necessarily the big short trade I'm talking about, but good intraday trades. Now, the semiconductors, SMH, is another chart that I shared. It's starting to curl over. It hasn't done so yet. It hasn't even broken this down-sloping trend, but we saw some weakness today, right? It gapped up, went a little bit higher, and that provided an opportunity to potentially build into a short position. Now, SOXS, this is one that I shared also. This is leverage. If you don't know how to trade with like leveraged funds, definitely read into it. Now, when I trade this type of stuff, I don't go crazy, right? Because this is already 3x. If I use one of these, it allows me, if I use a 3x fund, it allows me to use less capital, and then I don't need to expose myself, or I can have more capital for other things. So and when I do these trades, I typically front load them intraday, meaning I go a little bit heavier intraday, and then if I'm going to be holding it overnight, I reduce the position. So I'll share with you what I did, right? So yesterday we talked about it. Boom. Guess what? It gapped down, right? So as we talked about it, right? Yesterday, right over here at the close of business, we gapped down, creating somewhat of an opportunity to potentially start to build a position. Now, I didn't build it in right away, but I did build it in, I think it was right here about this pullback, and then started seeing strength, and then we broke above this little high, and that's when I was looking to enter in. So I front-loaded the position, and then I started getting out of the position right around here. So I am in this trade, but you got to understand, I took most of my profits, because just from right here to right up in here was a large percentage point gain, okay, right? Just this move, 11%. Now, keep in mind, we can break and go to 25, we can go to 30, we can go to 40, especially if, the semis keep going, but I do not want to hold my capital in a 3x fund, all right? So as it stands now, I have a 1% position, in a 3x fund right here. So, that's just kind of my take here. Hopefully that, I don't know. I just hopefully that makes sense. I just don't want people to, like, oh, okay, yeah, if he's going to be right, or I'm just going to go all in, and I just don't want anything bad to happen to any traders out there. So you gotta be focused on risk first. If you're not, you got to get used to that before you put your own capital at play. That's all I got for you on today's episode, everybody. Hope it helped out. See you later.